Hey guys, it's Nathan here, and today's video is about genuine savings and what it means as a first home buyer. By the end of this video, I'm going to share with you what genuine savings is, what it's not, and if your rent can be considered as genuine savings. And if you haven't already, please subscribe down below to keep up to date with all things property and finance. I'd recently assisted Nicole with securing finance for her first home. She found the home of her dreams for $500,000 and entered into a contract with a finance clause. Unfortunately, her finance application wasn't all smooth sailing. You see, she'd lived in Perth and had been working with a local mortgage broker who'd been referred by family. That mortgage broker gave it a thumbs up to make an offer subject to finance. However, they didn't realize that she didn't have genuine savings. Her $40,000 she had came from a recent sale of a motor vehicle. Needless to say, her local mortgage broker informed her that they weren't able to assist. Unfortunately, they weren't able to demonstrate 5% of the purchase price held up in a bank account for 3 months or longer. This was when Nicole stubbornly refused to accept this fate and stumbled upon our YouTube channel. She wasn't sure if we could help because she lived in Perth and we're based in Brisbane, but was surprised to find out that we help home buyers right around Australia. When I spoke with Nicole, we found out that she'd been renting through a licensed real estate agent for the last 12 months, which was something that some lenders were actually able to include as genuine savings instead of showing a savings pattern. This meant that we could show the banks that genuine savings was demonstrated and successfully secured finance and her dream home. Did you know that lenders have a mandatory savings policy when purchasing with a minimal deposit? This is known as genuine savings. Genuine savings shows the bank that the applicant has a bit of skin in the game, a bit of hurt money that you saved up the funds yourself. Most lenders like to see 5% of the purchase price saved up in a bank account for 3 months or longer. But there are a few exceptions to this rule. Today we'll walk through what genuine savings are, some examples of genuine savings, and what doesn't make up genuine savings, as well as a little hack you can take to speed up the time it takes to count as genuine savings. Now, lenders consider the following as forms of genuine savings. The first are savings held or accumulated in a bank account for 3 months or longer. The second are shares or managed funds held for 3 months or greater. The third is equity in real estate or property. The fourth is a term deposit held for 3 months or greater. The fifth is a first home super saver scheme. And the last, some lenders allow exceptions if rent has been paid for 3 months or greater. The majority of lenders agree on what makes up genuine savings, but where they differ is where genuine savings is required. Some lenders need to see genuine savings if you have less than a 10% deposit, whereas other lenders want to see genuine savings if you have less than a 15% deposit. To play it safe, we can assume genuine savings is required when you're lending over 85 or 90% of the property value. Keep in mind that the lender only requires 5% of the purchase price held in the bank account for 3 months or longer, which means funds for stamp duty and other costs don't need to be held in the bank account for 3 months. For example, if you're purchasing a property for $500,000, then the genuine savings required is only 5% of the purchase price or $25,000. You need to hold $25,000 for 3 months or greater to meet genuine savings policy, plus hold enough funds to cover any extra costs such as stamp duty and any other fees applicable with the purchase. Also, be aware lenders' mortgage insurance might be applicable with minimal deposits. Just holding money in your savings account isn't going to cut it as genuine savings. The banks want to see some hurt money and see that you've held some funds in your account for a few months to be counted. So the following don't count as genuine savings: refunds and tax returns, bonuses from work, sales of assets like cars, first homeowners grant and the Great Start grant, money held in a business account, money from a personal loan or a credit card or borrowed funds, incentives paid from property developers and builders, and lastly, deposits paid from developers and builders. Now, a quick tip here: if you've held any of the above funds in your bank account for 3 months or longer, this can be considered as genuine savings. A typical example of this is if you sell your car and you might have sold it 6 months ago and it's been in your account for the last 6 months, this will be counted as genuine savings. But if you've sold it only in the last month, well then it won't count until you've held the funds in there for 3 months or longer. If you have a good rental history, some lenders will consider making an exception to the genuine savings policy and consider deposits from other sources like gifts from family, so that you don't need to show that you've saved up 5% of the purchase price for 3 months or longer. To use rent as genuine savings, you need to be currently renting and have at least 6 months clean rental history. You need to be renting through a licensed real estate agent, so it can't be through a private rental agreement or living with parents at home. And lastly, you need to ensure the tenants on the lease are the same as the people that are going to be looking for the loan. The good news is, if you can fit these criteria, then the rent that you've paid over the last 6 months can be considered as genuine savings rather than showing savings in a bank account. This means you can use deposits sourced from non-genuine savings like gifts from parents instead. You'll need a copy of your rental ledger or a reference letter from the managing agent as evidence that your rent can be considered as genuine savings. Keep in mind you'll still need a deposit for your home loan even if you're renting. We recommend you have between 8 to 10% of the property purchase price in savings. In recent times, banks have eased up on their genuine savings requirements. The bank's genuine savings requirement is largely determined by how much deposit you have to purchase your home. For example, if you have a 20% deposit, then there's no genuine savings requirements, whereas some lenders don't require genuine savings if you've got a 10 to 15% deposit, whilst other lenders will require to see genuine savings only if you have less than a 10% deposit. If you have less than 10% deposit, it is still possible to get up to 95% of the home value without genuine savings. This is provided that you meet some of the following terms. You must be renting through a licensed real estate agent and have been paying rent on time for the last 6 months. You've been regularly employed over the last 6 to 12 months. You have good credit and you don't have too many credit cards or car loans. So what's preventing you from qualifying for a home loan? Here at Hunter Galloway, we get home loans approved. So if you're living in Australia and looking for a mortgage broker, we can help. Visit us online at huntergalloway.com.au or call us on 1300 088 065 and we'll see you next time.